Good morning and welcome to the December 4th, 2009 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, this morning, rather than feature an individual stock, we're actually going to take a look at the indices because they are at a critical juncture here. You can take a look at this downtrend line right here, connecting the highs that we saw at the end of 2007 when the market put in its all-time high. Then again, we had a bounce-back reaction high at the end of 2007, and then again one more significant high in the early part of the second quarter of 2008. And when you connect those highs and come across, you can see that the current price action right now is just about to intersect that long-term downtrend line. Now, one word of caution: anytime you use a downtrend line or any kind of a trend line, you are at it's somewhat subjective in that the line could be connected a little bit higher, a little bit lower. So it's really this general range that we're looking at in terms of the trend line. Certainly, if the market continued pushing forward and we saw the Dow get to 10,700, 10,800, so forth, that would start to give us some pretty significant clues that the downtrend line had been broken. Another thing that's pretty interesting here is when we take a look at the long-term price resistance. This is where the Dow, the S&P, all really fell apart at the end of September and early October 2008. That's when the real panic selling started to kick in. So we consider this area to be pretty significant price resistance as well. So you can see this quadrant, or this little point here, where the downtrend line and the price resistance line are approaching. Right about 10,400 to the 10,600 area becomes very significant resistance on the Dow. This is a very likely pivot area where we could see the market roll over and start to move lower. So we would be taking appropriate steps to caution against or hedge against such a potential move to the downside. The other thing I want to point out is notice these red arrows. Each time that the RSI on the weekly chart on the Dow has approached 70 or gone above 70, we've seen some fairly significant tops form. Notice now with the RSI up near 70 again, currently at 68.79, it's right at about this trend line. So it's giving us additional clues that this could be an area where the market wants to simply pause, even if it's just for a temporary period. Stochastics on a weekly basis also around 90, so both RSI and stochastics are confirming overbought conditions. At the same time, we're hitting rather significant price resistance and a key downtrend line. So as we look forward to the jobs report and how the market reacts to it, just keep in mind that we are at a very important juncture technically, and it might not be a bad idea to kind of sit back, take it easy, and watch and see how the market reacts here. I hope you've enjoyed our presentation today. Be sure to check out our Chart of the Day every day at InvestedCentral.com. And while you're there, sign up for our free weekly Market Pulse newsletter and have the Chart of the Day emailed directly to you each and every day. Happy trading.